Hello and welcome everyone. I'm Janne Muta, the Chief Market Analyst for TO Markets. Today we're going to take a look at EURUSD, AUDUSD, USDCAD, TPR and PYPL. So let's take a look at these markets to see if they provide us with some trading opportunities. But before we do that, let me remind you that the views expressed in this presentation are our opinions only. They are not investment advice. You should only watch this video if you agree with this disclaimer. Okay, 2 days ago we started focusing on EURUSD as it was breaking out of this technical formation. It's called a bullish wedge formation, and this is why we believed that above this low here the market is going to be bullish and it's likely to move higher. So since yesterday actually there was something very interesting happening with the market. We basically got the indication from the Fed that they're not that interested in starting the tapering, so that's dollar bearish and EURUSD went higher. It has actually moved to our the first resistance area here. We have 23.6 Fibonacci retracement and this recent swing high here. So whether we get some retracement from here or market trading through, we don't know obviously yet. But if you come to the webinars, if you go to tomarkets.com/webinars, and this is where you can register for the free webinar. That's where you can ask all your trading questions, and I'm more than happy to help you to learn, because I want you guys to succeed in trading. And this is why I provide this analysis also. So what are the key areas here? We have this low from 21st of July. We have, if the market stays above this low, we believe it's bullish. And there could be obviously a quick sort of confirmation for this bullishness if the market just pushes through this level. We don't know yet if we're going to see some profit taking here, a pullback and then move higher, or is it just going to keep on rallying. But if it does, then the next significant level is up here, around where we have 50-day moving average and this swing high. So that would be an area from about 1965 to about 1980. So this is what it looks like, bullish at the moment, as long as it stays above 1751. AUDUSD has been trading sideways fairly close to this channel low here. As you can see, we have a huge channel, a bear channel in place, and the market has been since last week's Wednesday trading sideways close to this lower end. And yesterday we heard that the Fed is not likely to start tapering soon, so that's dollar bearish. And at the same time we are hearing some speculations today that the RBA might actually delay their tapering because of the Sydney lockdown. So we have dollar bearish and potentially Aussie bullish news. That's why the market rallied today. Now, if it happens that the market just can't close above this high here, the high of 73.97, then we could get a pullback down to this trend line, and then obviously we need to see either the market just moving here and bouncing higher and then probably going through this level, or if it just goes through this and keeps on moving down here, then that kind of negates any early signs of bullishness in this market. So let me stress that this market definitely is in a downtrend. So we still have the market making lower lows and lower highs. But this higher low here is the first sign that maybe the bulls are stepping in, maybe they are looking for a chance to turn this market higher. We don't know what's going to happen, so we don't want to bet the farm on it. We don't want to make statements that now this market is going to turn. We don't know the future. We never know. But the reason I'm giving this to you is so that it's a heads up for you and you can follow the price action and see what happens. So if we get a close above this resistance here, then it's more likely that we get the market, more bullishness in this market, and it can actually push through this first resistance area, which is where we have 23.6 Fibonacci retracement and the 20-day moving average. Then the next level to look at is from spot 75.03 to 75.21 roughly. And then if that is penetrated, it's possible that we get a move all the way up to 75.85 to 76 range. So this is what I'm seeing at the moment. If the market just goes lower and breaks this level, then obviously all the early signs of bullishness are negated and the market is more likely to just keep on going lower. USDCAD caught my eye on Monday, mainly because it had failed to move any higher after this move lower. So there was momentum move to the downside, and that suggested to me that the psychology is different than it was earlier, and now this market would be more likely to sell the rallies and break supports. And this is actually what happened. So let's go and see here. This support of low was 25.25, so this support here was broken after the rally failed here. So the market never was able to move above the 26.07, but failed, and now that the Fed has come up with some dollar bearish commentary, the market just broke the support, and it broke also this rising trend line support too. So is the market going to go to this range that I gave in my analysis? The range being from 22.50 to 23 even. I don't know. Like I always say, I don't know the future, but market analysis and trading isn't about knowing the future. It's about assessing the probabilities. Now we have bearish news regarding the Fed. It's not going to start tapering as soon as expected. We have the market breaking supports and we have market making lower highs. So the probabilities are on our side that the market is going to go lower. Whether it goes down here in 3 days, 4 days or 2 weeks, I don't know. It could actually just turn higher from here. All that I don't know the future again. So the market could turn higher from here and just keep on making higher lows and then eventually pushing through this resistance level, and that would negate all the bearish ideas. But that's for you to follow. That's for you to check upon the charts on daily basis and to see where and how the market is trading. At the moment, the market is bearish. So the probabilities are that the market is going to create more lower highs and lower lows. Therefore, the bias is to the downside. Tapestry Inc. or TPR is a company providing luxury accessories, but we're not interested in the product range or the fundamentals in general. We are just interested in what the price action is telling us. And at the moment, we are getting indications that this market is trending lower. We have lower lows and lower highs. We have the moving averages pointing lower, 20 period and 50 period in the right order for the bears to sell the market. The market is also, it has rallied quite a bit from this channel low to an area that used to be highly significant. The market bounced higher a couple of times, 2-3 times before this level was penetrated. And now we are back to this level, and the oscillator, the stochastics 5, 3 and 3 is in the overbought area, and so kind of almost giving a sell signal there. So all technical factors point that this market is going to go lower, and if it does, then we have interesting levels here. We have this channel low and that sort of latest low swing point here. That's from 36.60 to 37.20, and if that doesn't hold, then we have the next significant level all the way down here around the 50% Fibonacci retracement level from about 29.60 to about 30.80. And obviously there's always the possibility that something changes with these single stocks. You always are vulnerable to sort of market news, and that's why I would suggest you only trade intraday if you have high leverage in your positions. because these, as you can see, this market can gap higher or lower, and if there are some news that take the market higher, then obviously you don't want to be short the market overnight. Anyway, so looking at this, if we get the market rolling over, we are looking for shorts. If the market keeps on going higher, making higher lows and pushing through these resistances here, and this area, obviously, let me take this area around the upper end of the channel is from 42.25 to, sorry, let's take again, 42.25 to 42.80 or so. So if the market just keeps on pushing through, then the bearish indications are negated. PayPal stock rallied strongly in February this year. It rallied to 309 before retracing significantly lower. The market has since then rallied though, and is trying to break the same level again. So we have market making higher lows here and moving inside this channel. So the bull channel, if it stays intact, meaning that the market doesn't violate this lower end of the channel, or these support levels, the first one being at 288.73 and the second one at 285.70. If the market doesn't violate those and creates higher lows above them, then we have a good chance that the market pushes above 309. So we might have bullish opportunities here. If the market, however, starts to violate these and drift lower, then the next significant area is down here around where we have 38.2 Fibonacci retracement and we have 50-day moving average here. So that area is from about 275.45 to 279 spot 36. If you don't know how to take advantage of the analysis that I provide here, then you should go to tomarkets.com/webinars and register for the next free webinar. This is an event where you can ask any trading questions you like, and I'm going to be there for a good hour answering your questions and helping you to become a better trader. So really thank you for your time with this, and I look so much to see you in the next webinar. Trade safe, never trade without stops. Thank you.